Hey, the story of Elliott Wave continues here. I am your host, the Cowboy. This is Elliott Wave Cafe. We're going to take a look today at 10, which is a nice solar ETF. And, we're going to see what the wave count is telling us about it and what we can learn from the current price structure. Again, I'm your host, the Cowboy. This is Elliott Wave Cafe. Let's get started. All right, so you're looking at the chart of 10, and we're starting somewhere in 2013, and I'm going to ask you if you want to take a look at counting this ETF from these lows up here to the highs, and kind of tell me what you're seeing and how you can come up with your best interpretation of the current price structure in here. Okay, so here is what I'm thinking. Here is what I'm seeing, and the reason for today's video. And I'm going to try to do a video like this every single week. I used to do them a little bit more often when I had more time, but I think just once a week, if we can take a look at the Elliott Wave, I think that's that would be pretty cool. That can help, I think, a lot of people trying to learn this methodology. And I picked 10 today because I talked about it in the pro member video, and it caught my attention just by scanning through some of the ETFs that we watch on a regular basis, and I looked at some different things, and this one kind of popped out to me. Especially with the latest move back in here. So I do have a longer term count, and I want you to kind of see, where you are with it, and I'm going to show you mine here in a second. But, a couple of clean impulses in here. So you have this impulse from 2013 to the beginning of 2014, and then, you had through this big correction here for, almost 4 years in the solar market, and then, you began a new larger advance, and you went up from, I don't know, what was $10 or something up to 120 in a pretty strong, larger, what it seems to be a third wave. Well, if that's a third wave, right, that means that this back in here, it's probably got to be a fourth. And if it's a fourth, that means that we're probably going to get a fifth wave higher. However, this is kind of how and there's a couple of ways to kind of do this, and I'm going to ask your opinion as well. What do you think in the comments, and just let me know kind of how you're seeing this. But one thing that I look at is I look at this move right as being the first impulse out of here, right? So we can look at the 1, 2, I think that's a 3, 4 with maybe with the failed fifth in here. So that's a wave 1. Then you're coming back in a second wave in here, and then you go up in another 1, 2, 1, 2, 3, 4, 5, 4, and 5. So let's see how this looks. Right here I have it. So let's just go with the wave 1 cycle as the first one, as the largest one, beginning back in here, right? So this is pretty clean. I mean, this moves in here, they're pretty textbook. So you can see the subdivisions, 1, 2, 3, 4, and 5 for a wave 1. Then you pull back in a deep second wave. This one corrected about 78.6%. Pretty clean, pretty nice. Then you go up in a wave 1 again, and this is at the primary degree of trend, and then you pull back in a second, then you do another 1, and this is a monthly chart, right? And I'll show you a little bit how this looks, because also the internal of these structures here in this intermediate wave 1, so you go primary 1, intermediate 1, and then you pull back in a deep wave 2. That is also at the 78.6, if you notice that orange, right? So 10 has a tendency to pull in second waves, has very, very deep second waves. Let's see this one as well. This one was just a little bit deeper, almost 100%, but somewhere in there, maybe about 80% on that. I'm going to delete it. But, just another intermediate deep second wave pullback. Then you go up in 3, and then you look to be doing more of a, this one was very directional, very, very sharp, right, with an 80% drop. And then this is more of a 50% drop, and it's just kind of controlled. And maybe an ABC, maybe a WXY, but it suggests that if this is correct, 10 should move higher in one more move in here towards a fifth wave. Maybe into 2023, maybe towards 2024. This move will try to continue. So let's drop for a 1 month to a 1 week and see the price action a little bit just inside these structures. So you can see back in here, you know, and this is kind of how we do it. We just kind of count. So this is the second wave. Then you go up here, 3, 4, triangle in 4 in here. I think that's what we're getting. And then an A, B, C, D, and E. And then with a clean fifth wave, that completes a wave 1, right? So just a pretty nice, I would say, impulsive move. Then back in the second wave, right out of there. So you got a third, fourth, and fifth in a wave 1. And then look at the structure inside. This is pretty cool third wave. So you go 1 in, you know, up in 1 again, down in 2, long third wave up in here, down in 4, biggest correction, and then one more time you push higher in this fifth and you complete a wave 1. Then you come back in a second exactly into the 78.6, and you know, then you go up again in this kind of larger third wave move. I mean, this is a pretty cool one. You might even think it's probably a second wave in here. You got somewhere in here, you probably have a fourth. So very, very sharp. You know, the subdivisions are not that clear, but unless you go to a smaller time frame and start to kind of really count inside it, it doesn't really matter at the moment, because this is clearly, you know, a big, large advance and very impulsive, almost textbook, you know, Elliott Wave moving here, right, for an impulse. So big, large third, and then you start to correct lower. I've labeled this as a WXY, and I'll tell you why, because, and it's not necessarily my preferred interpretation now that I look, you know, more at it, but the only reason I'm doing this is because I'm having what it seems to be a three-wave structure from these highs to these lows in here in this kind of A, B, and then down in C. Makes the counting of this wave a bit more complicated, because you would have to go in an A, triangle, be down in C for a W. So that's the first zigzag. You go up in an A. This is beautiful. I mean, this X wave is just gorgeous, either X or B, because you go up in A, down in B, and then up in C. I mean, it's just a simple, clean textbook. This is why I love Elliott Wave, because sometimes you're just, I mean, a lot of times you're getting this type of a pattern, and up into 101.36, and then you're selling off again, and then you're selling off into some interesting equality in here, right, for a WXY. And from these lows, right, now you're starting to begin an advance. You're between parallel lines. It's overlapping, choppy, what it means to be a correction, and you're breaking above this channel, and now you have your eyes on this 101.36 as targets. If this wave is complete, and if it's a fourth wave, it should be towards completion. And because anything bigger than that would start to look very disproportionate, and we would have to start to think of it as maybe a second wave. And I'll show you the scenario for that. So WXY, if you have a failure in here and you make new lows, right, that means that this is another X. So you go ABC, X, ABC, or WXY, X, ABC, for another you know, for another zigzag or whatever that's going to end up being. If it's a double 3, you know, then it's probably going to be, you know, who knows, maybe it's going to be a flat or whatever that you know, a last Y wave, the Z wave, I'm sorry, it wants to be. So that's kind of what I'm watching, right? So for right now, let's see if this is going to be a 1, 2, 1, 2 back to the trend line and try to break higher. That would be ideal. The way I would look at it would be to, you know, a little bit of a trend line in here and see if you don't violate that. And if you continue, that's a good thing. And that means that the trend will be kind of intact. So I'm watching this again, just as a simple, right? 1, 2, 1, 2. And then after a series of this, of, you know, a couple of 1s and 2s, especially on this, you know, kind of weekly time frame, right? That third of a third is massive, right? And that's kind of one of the clues that tells me that that's that meat of the move. And then, you know, you're falling into a fourth and then back in fifth. If this wave would have been, you know, kind of smaller, you know, and in a different kind of looking way, you know, then probably I would have thought a little bit different about labeling this in a 1, 2, 1, 2. But this one seems pretty good, pretty clean. And then we're still probably at a larger degree of the end of the larger cycle. We're still in this kind of larger third wave cycle, right? So 1, 2, 1, 2, 3, 4, and 5 to complete, let's say, this wave 3 primary. And then we would fall back into another fourth wave in there like that. And then you would do a fifth and a third, and then you would have to do a fourth at the cycle degree. So all of this will, you know, will kind of hopefully continue to go up in this maybe massive channel. And the way that might look is if we're And let me just kind of do this live here, right? If we can kind of start to connect these in there like that, and then you come lower from the second wave, you know, that's probably kind of the correct approach in kind of how this would maybe look. You know, something like that, where you would have a baseline where the prices could probably travel if you're getting some kind of a, you know, if this is bigger like that, you know, and then this comes lower, then there is enough room to kind of, we don't know, right, exactly how it's going to go, but it's just a little bit of a roadmap in kind of what, you know, how it's kind of supposed to be looking as we're moving forward in the years ahead, and this technologies become better, and you know, whatever, nobody really knows how it's going to end up being, but, you know, we're assuming that we're moving from, you know, from oil maybe to more, you know, being energy efficient and using other alternate forms of energy, whatever. That's a different discussion. So now, you know, is there anywhere, is there a different way to kind of count this? And remember, I was telling you about this being, the probability of this being maybe a second wave and not a fourth, and if it can continue to kind of to drop lower, and that would look like this, right? Just like I've showed you before, it could actually be done in a couple of ways. This could be just an ABC. So you can go, and I'm going to do a combination starting here. So you can go like that, W, X, Y, like this. And then this would be the first ABC. And I'm talking correction. I mean, I talk about corrections all the time, ABC, like that. You know, and then you would have another ABC in this Y wave. I'll decompose this as a, not as a combination, just as a zigzag ABC. Something like that, and show those lines in there. So ABC X ABC, and that means that this channel will continue to kind of develop something like that. Okay, this would be, let's say, if it gets larger, right, then we will look at this as a second wave. Now, how could that be a second wave? Well, the way that would be a second wave is you would have to look at the structure out of here as not being a 1, 2, 1, 2, because then you would not have a second wave anymore. But this whole sequence that starts from these lows to these highs has to be one move. Okay, and how do we know from, you know, the Elliott Wave principle? You know how, you know, when you start a sequence, an impulsive move or a motive wave, right? They can be, motive waves are two types, right? They are regular impulses, which is a 1, 2, 3, 4, 5, and then you have a diagonal, right? So these are the only two types of motive waves. You have impulses, regular impulses, where you don't have overlap between the waves. They're pretty clean and in a 1, 2, 3, 4, 5 structure. And then you have diagonals where you have overlap. So you can see this wave in here overlaps the wave 1 and gets into the territory of the wave 2. So this cannot be counted as a one sequence in an impulse. It has to be a diagonal. So I would take my diagonal kind of tool out of here. Leading diagonal would be called, and then you would go up in 1, down in 2, up in 3, down in 4, and then up in 5, and you would create a leading diagonal, you know, this kind of large degree of trend. They're kind of rare like that, and I don't think it's the approach, because it's just, you know, you rarely see these types of moves, let's say, at the, you know, in such a large time span. I don't know, 2017 to 2021, so about a 40-year expanding leading diagonal, we would call it, because this, you can notice in here, right, wave 1 is the smallest, wave 3 is bigger than 1, wave 5 is bigger than 3, wave 4 is bigger than wave 2, so this is the, you know, this is what we call it, the expanding variety, where the moves open like that. So it's an expanding leading diagonal. It's the size of this, you know, wave 5 is not kind of what I really want to see. I would have liked, let's say, for this one to terminate, you know, to look more like that, right? That would have been a more appropriate fifth wave, where you would go, and I'm going to draw on this, right? That would be the textbook idea. 1, 2, 3, 4 for a leading diagonal, something like that. Okay. And then you would get your ABC back, which is kind of what we're seeing here, and that would be the second wave. And then so you have 1, 2, 3, 4, 5, and then so that's the textbook idea. This is the market's idea right here, right? This is kind of exactly what happened, but it doesn't make it any less, you know, any less valuable, any less important, right? I don't think we're breaking any rules in here. And remember, in leading diagonals, expanding or contracting, it doesn't matter. Each internal leg, you know, it can be an impulse as well. It doesn't have to be a zigzag structure like you're having in the ending diagonals. Those have to be zigzags. So here you have a 1, 2, 3, 4, 5, and then again 1, 2, 3, 4, 5, and then again a 5-way sequence inside each of these impulsive legs. So if that's the case, that means that this is a wave 1 or a wave A. It doesn't matter which one you want to pick at the moment, right? So this would be that 1, and then you would fall down in this kind of 2, and then you would push up from there. Let me see what happened here. I'm going to fix this really quickly. All right, let me go back. There you go. I'm just adjusting really live here the wave, so hopefully kind of bear with me, because the moment you change, you change the degree in here, right, motivator automatically changes the internal structure, so we're making sure that we're following the right thing. So this now, it's an intermediate, so that's a primary, and then that second wave that I just deleted, that's in here, right? So it goes as an A, B, and then up and down in C, like that, and that's at a minor degree of trend. So this, how this would become, let's say, a second wave pullback like that. Now it can still be a leading diagonal, an expanding leading diagonal, because this wave 2 will basically move, will move up in here. So this here, right, if it's done, it can still be a second wave, but it will be just a shorter one. It doesn't have to be that deep. It will be just a second wave right in here. This becomes a wave 1, that's a wave 2, and then you're off into the races for a much, much larger third wave in 10 in this kind of solar ETF. So just kind of discussing, like, this cannot be, if it's pushing up that much, and I'm going to kind of close off with this, is if it's pushing up that much, it cannot be a fourth wave. It would be a very unlikely scenario, right? Because it would, first of all, it would probably get into the territory of the wave 1. So if you remember, you had the 1, 2. Actually, let me go back there, right? You would have this, right there is the top of the wave 1. So remember, you can't really have anything kind of get there, right? 41.86, and by the time this would correct, it would be just very, very close. Plus, it would be, even now, it's a little bit disproportionate, right? But it's still doing fine because this was so sharp. Okay, so that's the idea. You can have these two counts, either as a fourth in here, right? Or as a more, and finished, and we're pushing higher, or as a second wave in case we're falling apart again, and this becomes a WXY. And one more thing I wanted to say, because I wanted to talk about this correction, and you see kind of how I label it in here. First, in this one, I label it as a WXY, but I wanted to tell you that you can also label this as an ABC, and I'll show you how that gets done. And I'm going to go from a, let's go to a 2-day chart, just to kind of see a little bit closer the data in here. Right, so this is your WXY. So let's just delete this, and let's just go with with the simple ABC. So you can notice in here that you have a 1, 2, 3, and this is a beautiful triangle. Right in here. It's kind of what we call a barrier triangle, where wave. So this is A, B, wave B and D are at about the same level, but this is on the declining side. Right, you can have barrier triangles to the upside, barrier triangles to the downside, where the bottom part of them is kind of flat like that, and then you have this as well. So this becomes a 1, 2, 3, 4, 5. So let's just kind of put that impulse in there. So 1, 2, 3, 4, and sorry about that, and 5, like that. Right, so 1, 2, 3, 4, 5. So this is kind of what throws me off, and then inside it, you also kind of have, I think, almost like a 5-wave move. I always look in this kind of third waves for that sequence, right? So you can see 1, 2, 3, 4, 5, 4, 3. So this to me looks much better than counting this thing as a, as an A, 1, 2, 3, 4, 5, B, and then down in C, as part of a W. So that's the problem. Anyway, so this looks pretty good. 1, 2, 3, 4, 5. Then you go up textbook here, 1, 2, 3, 4, 5 for A, down in B, and then again up in C in here. I think either we terminate there or we terminate here. It doesn't matter. Let me put that up there, right? So this is your A, B, and then let's just kind of do it there. Maybe that's a 1, 2, 3, 4, and or a triangle in 4, and then up in 5. Okay, let's go back and zoom out a little bit. Okay, and then you have this. Sorry about that. I just wanted to kind of see how it looks. And now this is the bitchy problem, because this wave in here dropped below this wave right there. And if that wouldn't have happened, then I would have been, you know, maybe tempted to look at this as an impulse too, and then the beginning of something else. But the fact that we dropped lower, you cannot count this as a second wave, right? Because second waves can never get below, you know, the origin of the wave one. So that's not good. But what it can happen here, even though this is a big wave, right? Maybe the C wave terminates right there, you know, like that, and it's a nice 1, 2, 3, 4, 5, and then this is what happens. And we're just getting, I mean, the market is just giving us a large fourth wave. So that's a 1, up in 2, down in 3, up in 4, and then down in 5. And then that kind of completes that, you know, 1, 2, 3, 4, no overlap, and 5. So 5 of 5. And then in here you also have, you know, your kind of, if you look inside here, you might find your sequence that goes, you know, 1, 2, 1, 2, 3, 4, 5, 4, and 5. So this whole thing becomes a third wave. To me, you know, this looks, in a way, you know, it looks much cleaner like that. And I'm going to make this just a little bit bigger here, push it down, and now we're going to take the ABC tool and we're going to go. So that's where we started. That's your A. That's up in B and then down in C. And then let me change it's going to change the degrees like that. Okay, so 1, 2, 3, 4, 5 for A, up in B and then down in C, and then check out the C versus A. You know, look at the 100%, right there at the drop in the C wave at the bottom of the channel as well. So nice A, up in B and then down in C. So it can be, you know, arguably, right, just a simple zigzag and an ABC, or if you want to argue about it, you can do a W, ABC, X, ABC, and a WXY, a double zigzag. It's not that important. The most important thing is that it looks like this should be a finished correction already, just pending a break of this 101.36 to the upside. There will be an important clue that we're ready to make the new high here in 10. And then another important clue is we would not want to see a break, you know, below these levels in here. 65.90. If you're breaking below this, then this is just a little tip that I have for you guys on Elliott Wave. You know, then this becomes a three-wave move, and it's very hard to stay bullish based on the structure, right? And then it's very likely that this might be just a fake rally, just an X wave in there. As always, listen, I appreciate you watching, guys, and you know, hopefully you love Elliott Wave, you love this channel. As always, subscribe and like, and come visit me in the Pro Room, where we do this every single day on videos on macro, Bitcoin, and everything else under the sun. But thank you for watching. I appreciate you all. See you next time. Bye-bye.